Hi, I'm Paul.
And I'm Blake.
And we're at the Knowledge Real Estate Group at Keller Williams. Hey, Blake, question for you. How do you calculate the numbers for a rental property?
Great question, Paul. So real estate investments can be a great way to earn passive income, but you need to be very careful and calculated. Not all rentals are good investment opportunities, so it's vital to identify and move forward only with those that make good financial sense. This can change based on a number of factors, but the main way to determine if an investment will be a viable and profitable one is to run the numbers. Let's take a look at how to size up an investment opportunity and what it means to run the numbers.
Thanks, Blake. So the first thing to do is to figure out what your rental income is, what your operating expenses are, and the mortgage payment would be. The trickiest part of this is determining your expenses. Of course, it's always possible for unexpected things to pop up, but some common expenses are accounting for the vacancy, the property management fees, leasing fees, repairs, insurance, taxes, utilities, and HOA.
This is where the math comes in. We recommend you calculate what your net operating income and cash flow would be. To calculate net operating income, simply subtract your operating expenses from your rental income. The net operating income is important to calculate because it provides a clear picture of the property's financial performance and allows you to evaluate the investment's profitability. Essentially, the higher the net operating income, the better the investment return.
Then to calculate the cash flow, take the net operating income and deduct your mortgage payment, and that leaves you with your cash flow. Essentially, your cash flow will be a direct byproduct of your rental income and your expenses. A positive cash flow indicates that the property is generating more income than it's costing to operate and maintain, while a negative cash flow means the opposite. It's that simple.
If the net operating income and cash flow do not result in a positive figure, bottom line is run. That property is not the right investment.
So Blake, in addition, the two numbers we want to see on any property we evaluate are the cap rate and the cash-on-cash return.
So the cap rate is another calculation that helps you gauge whether or not a property is a good deal. Essentially, it compares the return on investment to the purchase price to indicate how good of a deal you're getting on the purchase price itself. The cap rate equation is simple. Simply take your net operating income and divide it by your purchase price, and that equals your cap rate. If you already own the property, don't use purchase price, use market value. Cap rates vary based on the type of property as well as many other factors such as location and market conditions. If you want to determine the cap rate for your rental, please give us a call and we'd be more than happy to just run these calculations for you.
Lastly, we want to calculate the cash-on-cash return to determine exactly how much return you'd be getting on your money you invested. To calculate your cash-on-cash return, simply divide the net annual income by the total cash invested. As with the cap rate, a good cash-on-cash return for the residential property depends on a variety of factors, including the location, market conditions, property type, and the financing terms. If you'd like assistance calculating your cash-on-cash return, please call us and we'd be happy to run these numbers for you.
While we consider these numbers to identify and assess potential real estate investments, there are many subjective considerations to also take into account, which is why you should consult with an experienced realtor or certified financial planner before you make any final decisions. If you have any questions about the viability and profitability of a potential real estate investment, please call us at 916-919-5775.
We'll help you run the numbers on any property and explore all the possibilities to ensure you optimize your investment.
We look forward to hearing from you.